Ladies and gentlemen, welcome back to the channel. This upcoming week is going to be absolutely insane, and we're going to be going over everything you need to know about the broad markets, about earnings season that kicks into gear full steam ahead, as well as everything with AMC stock that is going to transpire this week. Hit the like button, subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, earnings season is the best season. If you want to come trade with me live every time I make a trade, link down below in the description of this video. Nonetheless, let's dive into it. First things first, with the economic data that is going to be coming out this week. So you really don't have anything on Monday. You do have a lot of bond auctions, believe it or not, a 3-month bond auction and a 6-month bond auction. You also have the Dallas Fed Manufacturing Index. Keep in mind the Philly Fed Manufacturing Index came out really bad the last reading, so you want to see how the Dallas Fed numbers come out. And that will probably be a pretty big catalyst, just like the Philadelphia Fed was. Now, 8:30 in the morning as well on Monday, Chicago Fed National Activity Index as well. You're expecting this to be negative also, so you definitely want to watch that. Tuesday, you're going to get house price index year over year and month over month, new home sales, CB consumer confidence, S&P Case-Shiller home price year over year and month over month, Dallas Fed revenues, all of these numbers coming out at about 9 o'clock in the morning, a 2-year bond auction as well, and New York Fed Treasury purchases 4.5 to 7 years. So some of that data could be key. Just depends if it's a big beat or big miss if the markets react heavily to it. Now, on Wednesday, you're going to get the first big catalyst, or bigger catalyst, I guess, with data, and that is the durable goods orders month over month coming in at 8:30 in the morning for the month of March. You're expecting a positive 0.6% reading. Last month's reading was negative 1%. So if you get a big move there, that could definitely be big. Now, I had to go ahead and get off that because the Discord was going crazy. You also have a 5-year bond auction coming in at 1 p.m. And then on Thursday, you're going to get GDP growth rate, quarter over quarter, advanced data for Q1. You're expecting 2.3%. Now, this is a catalyst that could really send the markets spiraling down. If this comes in weaker than 2.3%, and maybe substantially weaker, maybe like 1%, this could cause the markets to crash, because the whole reason the markets are still up right now is people are like, we're not going into a recession. I mean, we're expecting 2.5% GDP growth for Q1. How can you say that's a recession? Well, if this comes in a lot worse than expectations, this will be massive. So that's going to come out Thursday, 8:30 in the morning, as well as initial jobless claims and core PCE prices. So that will be big. This is for Q1. You're expecting 4.1% for core PCE. Obviously, the higher that is, the worse it will be for the markets. Now, real consumer spending also comes in at 8:30 in the morning on Thursday. You're expecting that to be positive 0.7%. If it's negative, if it's closer to negative, not going to be good. And then pending home sales comes in at 10 o'clock in the morning. You're expecting that year over year to be negative about 18%. Month over month, you're expecting a positive 0.3%. Kansas Fed Manufacturing Index also, like I said, will be important. But granted, you're going to have so many other data points coming in on Thursday. I don't think that's going to matter all too much. Really, in the grand scope of things, if GDP is super bad, I don't even think good earnings will hold the markets up at that point. Now, on Friday, 8:30 in the morning, core PCE price index month over month for March. You're expecting that to come in at 0.4%. Anything lower, that'll be good. Anything higher, that will be bad. 8:30 in the morning as well, personal income month over month for the month of March. You're expecting that to be positive 0.4%. Again, anything lower, not going to be good. Anything higher will likely be good. Personal spending month over month. Now, you could actually afford to see this go negative some more. You're expecting negative 0.2%. If it comes in more negative than that, might be a positive thing, because it might show inflation is not going to stick around, right? If people stop spending money, well, prices will drop, inflation will go down. So there is all of that Thursday going to really be that standout day. Now, if we take a look at what we have for earnings, oh my gosh, it is a big one, baby. So Monday, pre-market, Coca-Cola, Phillips, Bank of Hawaii, SIFI, Credit Suisse, Bank of Marin. And we're just going to look at the important ones here. Monday after hours, First Republic Bank, Cleveland Cliffs, Whirlpool. That is it. Now, the thing that I want to say, the way that I like to trade these not bank earnings, but just earnings in general, is going in, scaling in with a decent sized position, 5 or 10 contracts. I like to go like, if you're trading any of these earnings, the way that I like to trade them is like 2 weeks after for the expiration. I don't like to trade weekly options on stocks that report earnings that same week. That's a recipe for disaster. Now, if you go out a week or two, if you're correct and the directional move is the right way, right? Whether you're playing the puts or calls, you're betting essentially on that direction. Even if you don't see the biggest move initially, like you can see that continuation move for, a week or two, and their options can actually hit even if initially they do not. But anyways, I like to scale in 5 or 10 contracts and then just look to make like 25, 50% heading into earnings. And what I do then is sell out, make contracts free, and ride those into earnings. That's actually been one of the best strategies that I've ever employed around earnings season. And if you get big drops, big events, even a small amount of contracts can go very far. Like in 2022, when Facebook seen their first drop, we did that with 10 contracts, sold out, made 4 free. Each contract went from about $125 into about $5,000 because of the size and scale of the drop that you've seen. I only had 4 contracts. It was only a $400 position, turned into $20K real quick, right? So you can get rewarded with just a few contracts if you do get that big event. Like I said, if you guys want to come trade with me live in real time, link down below in the description of this video. It's going to be a very busy week for some trades. Now, Tuesday, pre-market, Verizon, UPS, Halliburton, GM, McDonald's, GE, 3M, Pepsi, Spotify, and Raytheon Technologies. That's a busy one. All of these are going to be big earnings. Think sectors as well. If you're trading like a GM, it's going to affect all the other autos. So sometimes the best trade can actually be a sympathy trade with GM, maybe playing Ford, right? Just think sectors here. So that's going to be big. Tuesday, after hours, you're going to get the big dogs. You're going to get Microsoft, Google, Enphase, Visa, Chipotle, Pacific Western Bank, Texas Instruments, Boyd, and Stride. Obviously, Microsoft, Google, these are really going to dictate how the markets trade. Microsoft is like 5% of the S&P, like 8% of the NASDAQ last time I checked. Alphabet is like, again, 3% of the S&P, so that's like 10% of the S&P right there that reports with those two names, and I believe it's like 5 to 6% of the NASDAQ. So you got massive weightings in the markets reporting here on Tuesday. Wednesday, Boeing, Humana, Hilton's, Hess, Tech, ADP, Thermo Fisher, General Dynamics, Boston Scientific, and then Wednesday after hours, Meta, Roku, ServiceNow, Pioneer, Teladoc. That's basically it. Thursday pre-market, American Airlines, Caterpillar, Eli, Southwest, MasterCard, Crocs. That's been on fire lately. That's one I really want to drop so I can buy some more, up like 125% on that since October. Absolutely insane. Altria, AbbVie, Merck. Thursday, after hours, Amazon, Intel, Snap, Cloudflare, First Solar, Pinterest. And then Friday, pre-market, you're going to get some oil companies in there. So big earnings this week: Amazon, Intel, Snapchat, Meta, Roku, Microsoft, Alphabet, Visa, McDonald's, GM. These guys will dictate how the markets trade. And then the following week, you're going to have more earnings, and specifically Apple on May 5th will be very, very important. So there you have that. And I think this could all exacerbate this collateral crisis that we could very well see with AMC stock. Now, let's go ahead and get into some of the data and numbers with AMC that you also need to know. So if we look at the short interest, you're sitting at about 26.5% estimated short interest of free float. Free float out on loan, 37.45%. Shares out on loan, 193.4 million. Days to cover was sitting at about 5 last update that we got. Cost to borrow rates in between about 300 to 350% on the higher end range. And the total value that is sold short in AMC is $678 million, 100% share utilization. Option activity remains to be very, very weak heading into this next week. 26% open interest in the calls, 74% in the puts. Now, it was a lot worse because your open interest on the call side was like 10% before. So keep that in mind. It has went up quite a bit. You're getting a little bit more of that, positioning for April 25th. April 25th, that is going to be Tuesday. You're going to have the court's ruling, and you're going to go up or down dramatically coming on Tuesday. I expect a very big move, and I expect it's going to be positive because I don't think the hedge funds are ready for this to be prolonged or a revo or something along those lines. And I think that's the base case for Tuesday. Now, for April 28th as well, for Friday, option expiration, you got 2,000 calls in the money, 96,000 calls out the money, 46,000 puts in the money, and 232,000 puts out the money. And I do expect that this option chain to really populate. If AMC stock does rip on Tuesday, you're going to see a lot of people flood into calls, and vice versa. If the stock drops, you're going to see a lot of people flood into puts as well. So there you have that. If we go ahead and take a brief look at the FTD numbers, go ahead and see what we're looking at for this week. The closeout date, per the T+35 settlement time. If we go ahead and look, so starting off on the 24th on Monday, you're going to see about 1.8 million FTDs that come due, almost 1 million that come due on Tuesday, 1.6 million on Wednesday, on Thursday about 1.3 million, and on Friday about 3.1 million FTDs that come due. So there's a lot of failure to delivers, there's a lot of potential buying pressure here, and it's going to be a crazy one as far as earnings. And I really think if some of these large names do fall, it's going to put a lot of pressure on those hedge funds with their collateral in AMC. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.